And here's an example of a similar position that I did in the bonds. So let's just wait for this to load up. I did the exact same strategy for trading the bonds to the downside back in towards the end of September. So I'm going to show you exactly what I did here. The bonds were trading at around 138. Let me see if I can bring a chart up of the bonds. So I was using TLT. Okay, so this is back on the 20th of September. You can see that the bonds had a bit of a move to the downside in early September to mid-September, and then rallied back up to its resistance trend line. Okay, now the trade was a bit risky because at that point in time, the bonds were trading above all these key moving averages, but you can see on this bar, if I just try and make it a bit bigger, look at that bar. You can see that it went straight up on this day, touched this trend line that I had already drawn from the previous moves, and was knocked straight back down. To me, that was a bearish signal amongst a few other things as well. And so I put on this trade, and I wanted to give myself a little bit of room to the upside in case I was wrong. Okay, so it's the same type of position that I spoke about in my previous video, where I've basically put on a put spread. Okay, so I've put on a 138, 133 put spread, and I have financed that position by selling calls just above where the current market is. Okay, so I've sold the 138 call, which is exactly where the stock is right now at about 138. So because I've taken in some premium by selling these calls, that's been able to finance the purchase of my put spread, which is a directional trade to the downside. You can see that I've only brought in $2 credit, but that's not the objective, right? The objective is to pay for the position that I have purchased here, which is these put options. Okay, now you can see my maximum profit is about $1,000. And my risk is also around about $1,000. So just because I've got a credit here doesn't mean that there's no risk. I'm only in this for about 40 days or so. Similar sort of timeline to the strategy I spoke about in my previous video. Now you can see that the position profits so long as the bonds move to the downside. Now the first thing I want to look at is, how much money do I lose if I'm wrong? Well, clearly, if you look at this chart, here's the stock chart. The previous pivot high is around about this 140 mark, okay? So I don't want to be in the bonds if they get back up around above this trend line, back up 140, 141, right? So if we make a little mark here, if the bonds start to trade back above this level, well, I don't want to be in this trade anymore. That's my stop loss level. Generally, if they're trading back above 140, well, that to me is an indication that I'm wrong on this trade, and I need to start to think about exiting the position to cut my losses, right? So that's how I'm going to manage this trade. Now, if we look at this particular risk graph, now I'm only going to manage this trade to the blue line, because if we have 37 days now in the trade, then roughly 2 weeks of time would have gone by if we're at this blue line. So if the stock in 2 weeks time is trading up around this level here above 141, so close to close to 142, like I said, above 140, 141, then I'm going to take that loss of $450 and I'm going to close this position. Now that's 50% of my entry. I've put roughly about $1,000 into this position, so I'm going to risk roughly $450 to $500. Okay, now you can see that that's plenty of room. That's that number there. If the bond are trading at 141.50, well, 141.50 is above all of these key levels, right? It's above here. I'm clearly wrong in my thinking. If the bonds are up around this, let me try and get a horizontal line here. If the bonds are up around that 141.50 mark, well, I'm clearly wrong. I should be out of this trade. So I'm happy for the stock to trade somewhere between here, between where if it starts to trade up above here, then I'm okay with that. I'm going to risk that $400-$500, but if it starts to go above that, then I'm going to look to close the position because I'm clearly wrong. So where on the downside then am I expecting the bonds to get to? Well, the last support level is back here where the bonds were at 133. Okay, now I don't know if it's going to get to that level, but that was certainly the last support level. So if it starts to move down, you can certainly see the bonds move back down to that level. But I want to see, where does my position make a nice 100% return on investment, because that's what I like to aim for. So that's what I need to look on the charts. Where do I expect to make a 100% return on investment? So that's sort of the next level of support, the preliminary target. So let's have a look on the risk graph. So if I move down, so what was the number there on the chart? It's up around this 133, 134, okay? Now, if I manage this trade to the green line, meaning that there's going to be 13 days left to options expire. If the trade is right now got 37 days, well then that means 20 days or so have sort of gone by. A few weeks have gone by. Now you can see that, what's the entry cost here? Let's have a look. So I've invested about $1,000. So where do I make $1,000? Well, I don't make $1,000 until the bonds are below 130. Okay, so it's so much lower than what our potential support level is. Okay, so how much money do I make if the bonds are trading back around about 133? Let's have a look. If we get to 133, then we're roughly looking at about $700-800 profit. Okay, again, I'm okay to give up a few $100 in potential profits, right? I can make a 100% return on investment. I could construct a position that makes a 100% return on investment with a put spread, for example, just as you've seen in my previous video, at where I believe the bonds are going to get to, maybe around about that 133, right? But that means I won't be able to have as much room as I have in this position for the bonds to move against me and keep me in the trade. That's the key. I want this to be an easy trade. I don't want to be whipsawed out of this position and have to manage this aggressively, okay? I want to give this enough room to move around. So I'm happy to give up, 10-15% return on investment, okay, which is a couple $100 off $1,000 of potential profit, and only make $800 profit, okay, at the same level on the stock chart if the bonds gets to that level, right? So if I'm expecting the bonds to get to this 133, 134 mark, then I'm okay to make $600-700 of profit, which is about 70 or 80% if it gets to $800 return on investment, and give up 20% return on investment and put this position on rather than generate another position that generates 100% return on investment if the bonds gets to this level, but would not let me stay in the position if the bonds would move against me a little bit further. Okay, that's why I like this type of position. Okay, I can stay in this position and manage my risk all the way up to the bonds trading back up around that 140 over 142 even, right? And I'm only taking a $550 loss, and the bonds are trading well above that last resistance level, because the stock could get back up to around that 140, 141 level before it goes back down. It could retest those levels, and that's why I want to stay in this position. If it does that, I don't want to put a position on where I lose that 50% because the stock only moves up a little bit. I don't want to have to take the position off if the stock just goes above 139, for example, and I have to take it off because position is losing that 50% of the entry. I don't want to be forced to do that because the bonds could then go back down. Okay, now let me actually show you the status of this position, because this was back in 20th of September. So if I fast forward, let me see, you can see the bonds actually right now have come back down off that trend line straight back down to this 133, 134, okay? Straight to where the target price was. Now, if I actually fast forward this as well to its current levels, let's actually see what that's done to our profits, okay? Just waiting for that to load up. So you can see the position is in profit by around about $580, okay? And that may be all that we get for this position. The bonds are now right back at their key levels of supports and may now start to trade to the upside again. So this position really needs to be adjusted or closed on the next trading day. So as I always say, always manage your risk accordingly. Only invest capital that you can afford to lose, and always identify your risk and manage your trades according to your own risk tolerance.